You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 5th day of August, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. The first one is private. That's our live trading room. That's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, when Michael comes on in a little bit, watch the screen and he'll walk you through step by step how to take the trial. Now, there's no credit card required for the trial. And not only do you gain access to the live training room, that's the first live broadcast of the day, but for 5 consecutive trading days, you'll have access to all the resources that our passport holders have access to, except for the members only workshop on Thursday night. Now, when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's a couple different ways you can join this afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says noon broadcast. Click the link, fill out the registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, so really all you got to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, but we also archive each and every daily broadcast. Currently, there are over 2,600 episodes archived for your educational and viewing pleasure. If you are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you don't need to watch them all, but just pick some days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. Do the same thing. Obviously, the more recent episodes are going to be more relevant to what's happening today in the markets and in the world at large. But again, it gives you a good idea of how we've evolved over the years. youtube.com/CFRN. Now, our daily schedule, we start with a devotional, word of prayer, some market news. Then I get into a recap of the Logic 247 alerts, the concierge trade alerts. About 12:50, Michael will join us, give us a recap of what happened this morning in the live training room. Then we'll go live on the TradingView platform and do some live trading for 30 minutes. Then I'll come back. I'll finish the recap of the alerts if I haven't already, and we'll wrap things up with our good word for the day. So let's get at it. Today we're going to talk about the parable of the sower. We're in Mark 4, starting in verse 1, and I'm sharing with you from the Message translation. He went back to teaching by the sea. Crowd built up to such a great size that he had to get into an offshore boat, using the boat as a pulpit. As the people pushed to the water's edge, he taught by using parables, stories. In verse 3, Jesus says, "Listen, what do you make of this? A farmer planted seed. As he scattered the seed, some of it fell on the road and birds ate it. Some fell in the gravel. It sprouted quickly, but didn't put down roots. So when the sun came up, it withered just as quickly. Some fell in the weeds. As it came up, it was strangled among the weeds, and nothing came of it. Some fell on good earth and came up with a flourish, producing a harvest exceeding his wildest dreams." In verse 9, Jesus asked, "Are you listening to this? Really listening?" And then in verse 10, when they were off by themselves, those who were close to him, along with the 12 disciples, asked about the stories. He told them, "You've been given insight into God's kingdom. You know how it works. But to those who can't see it yet, everything comes in stories, creating readiness, nudging them toward a welcome awakening." These are people whose eyes are open, but don't see a thing, whose ears are open, but don't understand a word, who avoid making an about face and getting forgiven. He continued, "Do you see how this story works? All my stories work this way. The farmer plants the word. Some people are like the seed that falls on the hardened soil of the road. No sooner do they hear the word than Satan snatches away what has been planted in them. And some are like the seed that lands in the gravel. When they first hear the word, they respond with great enthusiasm. But there is such shallow soil of character that when the emotions wear off and some kind of difficulty arrives, there's nothing to show for it. The seed cast in the weeds represents the ones who hear the kingdom news but are overwhelmed with worries about all the things they have to do and all the things they want to get. Stress strangles what they heard, and nothing comes of it. But the seed planted in the good earth represents those who hear the word, embrace it, and produce a harvest beyond their wildest dreams." Today's scripture tells of a time when a large crowd gathered around the Lord listening to him speak the parable of the sower. After Jesus was done, you can imagine most people went home perplexed. Yes, Jesus had told a fascinating story, but what did it really mean? In verses 10 and 11, we read, "When he was alone, the 12 and the others around him asked him about the parables. He told them, 'The secret of the kingdom of God has been given to you.' And there, away from the clamor of the crowd, Jesus revealed profound truths to them. Some had just walked away, unsatisfied, but others drew near, determined to understand in a deeper way." My friend, don't be the one who is quick to leave the Lord's presence. When you don't understand something, hang around after everyone else is gone. Crowd in close to Jesus. Let him teach you the secrets of the kingdom. Join me in a word of prayer. Heavenly Father, I don't want to miss anything you have for me. Lord, don't let me lose interest or drift away before you have finished speaking to me. Don't let me become impatient or discouraged as I wait on you for perspective and deeper understanding. When you are revealing secrets to others, please, Lord, tell me too. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Monday. Let me give you the numbers from around the world. Not particularly pretty, but it is what it is. Start here in the U.S. The cash markets, or the indices as they're called. Currently the Dow is down 824 points. It's a little over 2%. The NASDAQ is down 443 points, over 2.5%. S&P 500 down 119, 2.25%. And the Russell 2000, our man in the street, down 66 points. That's a little over 3%. Wow. In the commodity basket, crude oil down 20 cents, trading 73.31 last. Gold down $24.30, trading 24.4560 last. That's a drop of basically 1%. Silver down $1.04, trading 27.35 last. That's a drop of over 3.5%. In the Asian markets at the close, the Nikkei fell. The Nikkei fell 4,451 points. That's 12.5%. The Shanghai dropped 44, 1.5%. The Hang Seng fell 247, again 1.5%. And in the European markets at the close, the FTSE dropped 166 points, a little over 2%. The DAX dropped 343 points, 2%. The CAC fell 102 points, 1.5%. So we had a red day in Asia. It was a red day for the UK. And it's a big red radio Monday here in the US of A. there was ever a call for a turnaround Tuesday, tomorrow would certainly be the day. When we go to the charts, you're going to have a hard time taking it all in, but it is, again, what it is. And remember, with the indices, they're always going to go higher over time. Yes, there's blood in the streets right now, but that's also where opportunity lurks. Reuters says that markets are giving off Black Monday vibes as stocks tank. Now, this is coming out of the London office of Reuters. Global markets have kicked off the week in full sell-off mode, with measures of volatility shooting up by the most on record in a single day, while equity futures and cryptocurrencies plummet, reviving memories of past crises. There's no lone trigger for these moves, but data on Friday that showed the U.S. economy did not generate as many jobs as expected in July has been a major catalyst. And as you know, if you're a regular listener, we've been talking about this all year. It was inevitable. It's how markets work. But give good cheer, the markets will come back. They came back after the 2000 dot-com bomb. They came back after the quote-unquote financial crisis, or those mortgage-backed securities in 2007. And when this sell-off is over, they'll come back. At least the indices, because that's how they're built. They're built to always go higher over time, because the weak companies will be removed and they'll be replaced with strong, bullish companies. Are they stacking the deck? Yes. And if you're not young enough, you should take advantage of that via some type of index equity fund. A rise in Japanese interest rates on July 31st has made bets on a cheap yen, many of which funded purchases of assets with better returns, less profitable. The unwinding of these trades has accelerated the decline across global stocks. Tokyo's Nikkei index finished Monday with a 12% loss, the largest one-day drop since the aftermath of Black Monday in October of 1987, when a stock market crash stripped nearly 15% off this index and 20% off the S&P 500. I'm sure you've all heard of Black Monday. Not Google it. The excess volatility and the brutal nature of the sell-off have prompted a number of comparisons with past market storms. The 1987 Black Monday stock market crash, the global financial crisis of 2008, and the panic that the onset of COVID-19 lockdowns unleashed in 2020. The VIX index, which reflects changes in implied volatility on options on the S&P, is starting to signal distress. The index has shot up by 170% since Friday, set for its biggest one-day rise on record after February 2018's 115% gain on the back of spiking bond rates and the threat of a surge in inflation. The measure, often referred to as Wall Street's Fear Index, did not rise that much in a day during the March 2020 COVID crisis, when it posted several 40-plus daily jumps, or even during the depths of the global financial crisis, when it rose 35% a few days after the U.S. government stepped in to bail out Wall Street with your tax dollars. Now, the stock market sell-off is about more than just weak economic data. As we have already discussed, stocks are tanking, continuing losses from the past several trading sessions, as fears about a weakened economy have gripped markets. The NASDAQ dropped about 3.5%. S&P 500 fell about 3%. The Dow shed more than 2.4%, or about 1,000 points in early trading. 10-year Treasury yield fell about 2 basis points to hover near 3.7%, and is now down more than 50 basis points in less than 2 weeks. Volatility has spiked too. Trading platforms are raising margins. The CBOE Volatility Index, known by its ticker as simply the VIX, shot up above 60, again for the first time since 2020. The latest leg of the sell-off accelerated overnight as Japan's Nikkei 225 dropped more than 12% in its biggest ever daily loss after a surprise interest rate hike from the Bank of Japan. Now, you got to remember, the Bank of Japan is the one who invented negative interest rates. I don't know if they were first to invent it, but they were the first to utilize it. I think they stayed that way for quite a few years. Now, with the central bank tightening, while other central banks are easing, the yen suddenly had a big move to the upside, and that strength really led to a lot of margin calls on these speculative positions. That's all coming unglued, and I think it's a lot of margin calls, and I think it's going to happen pretty quick, and the unwind should be over by the end of the week. So there's a lot of pressure on the Fed. In fact, Yahoo Finance put out an article. Pressure on the Federal Reserve to cut rates is rising in the wake of heavy selling on Wall Street and a disappointing jobs report that stoked recession fears. As I've said it a lot of times, but if we get away with just a recession, we should feel very blessed. Traders are now betting the Fed will act more aggressively in the remaining months of 2024. They expect rate cuts of 0.5% in both September and November, and another 1/4 point in December. Previously, traders were looking at 2 1/4 point cuts for the rest of this year. Now, if this is what they call a soft landing, boy, sure hate to see a hard landing. JP Morgan's chief economist suggests there is even a growing argument for a rate cut before the next scheduled policy meeting. Now, that meeting is in September 17th and 18th. I've spoken last week about perhaps a surprise rate cut. Will that fix our economy? Will it fix the markets? Well, for a day, maybe a couple days, but it won't change the reality or the gravity of the situation that we're in. The article continues, the Fed looks to be materially behind the curve. Wilmer Stith, a bond portfolio manager for Wilmington Trust, doesn't expect a cut outside of a regularly scheduled meeting because that might spook investors. Normally, the Fed reserves such moves for times of extreme crisis. Now, I'd like to know what the definition of an extreme crisis is. If things continue to fall out of bed at the rate that they seem to be falling, anything is possible, Stith said. So he's talking out of both sides of his mouth. But I think it's unlikely that they move intermeeting because I think that's just going to put more fear into the market. I agree, but I still think it's possible that it could happen. What else we got in news? SoftBank. A stock rout in Japan wiped out $15 billion of SoftBank Group's value Monday after the company's biggest single-day fall since 1998. The technology giant's stock fell 19%, the worst performance since SoftBank listed on the it's easy for you to say, Tokyo Stock Exchange in 1998. Stock has now extended its decline for the September quarter so far to 38%, in line to be the biggest such drop since 2001. Wow. It's 23 years. For you bond traders, a major rally in the $27 trillion Treasury market is laying bare anxiety that the U.S. economy is sliding into recession, and the Federal Reserve will need to start aggressively cutting interest rates. U.S. government debt surged today, pushing two-year yields, which are sensitive to monetary policy, below that of the 10-year note for the first time in 2 years. That brief normalization offered a vivid indication that growth concerns are fueling expectations for supersized rate reductions starting in September or sooner. There's some folks out there that still have help. Now, several online brokerage firms, including Charles Schwab, Fidelity, and Vanguard, appear to be down for thousands of users early today during one of the biggest stock market sell-offs of 2024. User reports appeared to peak around and just before the 10 a.m. Eastern data from outage tracker down detector. Some frustrated customers online said that they were unable to log in or access their account balances. Now, I guess that could be a coincidence, right? Due to a technical issue, some clients may have difficulty logging into Schwab platforms. That's in a message that Charles Schwab wrote on social media platform X. Please accept our apologies as our teams work to resolve this issue as quickly as possible. A Fidelity spokesperson told the Associated Press via email this morning that the company was aware of some customers experiencing intermittent issues earlier in the day, but that it's now resolved. Vanguard did not return a request for comment. At its peak, Charles Schwab saw nearly 15,000 outage reports from users around 9:50 a.m. Eastern per down detector. Fidelity and Vanguard saw another 3,800 and 2,900 customers, respectively, closer to 10 a.m. Eastern. User reports appeared to fall notably for all three platforms an hour later, but timelines for full recovery weren't immediately known for Schwab and Vanguard. Now, commodities from copper and gold to crude oil plunged as a global financial meltdown broadened, with traders rushing to cash out of profitable trades and place fresh bearish bets across industrial raw material markets. Copper dropped as much as 3.8% on the London Metal Exchange, while silver led precious metals lower with a decline of more than 7%. Benchmark crude contracts fell more than 2% before retracing some of those losses. And we've been warning about the banks. This is our last piece of news. U.S. bank stocks slumped as fears of a recession sent investors fleeing from a sector closely tied to the health of the economy and towards safe haven assets. Citigroup led big bank losses with a near 5% fall. Wells Fargo, Morgan Stanley, and Goldman Sachs fell about 4% each, while JP Morgan Chase and Bank of America declined 2.7% and 3.5%, respectively. Lenders typically feel the squeeze as recession heighten concerns over credit losses due to higher unemployment, while loan demand, a key factor in profitability, also takes a beating. Now, an analyst over at Barclays says the economy is potentially slowing more than people anticipated based on last week's economic data. That first and foremost is the biggest driver as it impacts loan growth, income growth, credit quality, and more. Wish I had better news for you, but I don't. And I'm sure you're aware that NVIDIA shares are in the toilet as well. NVIDIA fell about 6% as the Magnificent Seven stocks were on track to wipe out roughly $520 billion in market cap during today's plunge. As of 11:35 a.m. Eastern, the Mag 7 group were tracking their 10th biggest market valuation decline ever. Together, the 7 stocks make up roughly 43% of the NASDAQ 100. The other components of the group also dropped, with Alphabet, Google, and Meta falling more than 2%. EV giant Tesla fell more than 3%. So, again, think back to previous market crashes. Everybody was running around screaming the sky's falling, like Chicken Little. We're not arguing that fact, it is. But we also know that's how markets work, and that eventually it will come back. Now, prices fall faster than they rise. It takes financial commitment for price to rise. But all it takes for prices to fall is for institutional traders to hit pause on the buy side, knowing that no matter how much they buy, and they buy in an incredible size, it's not moving the needle. They can only take so much loss, and then they just simply stop buying. That's when the institutional traders who focus on short selling come out of the woodwork and hammer those things as low as they can go, or as low as they can get them. Logic 247, that's our 24/7 around the clock E-mini alert service. It's not just E-minis, it's crude, gold, silver, euro, bonds. We're in week 314. Over the last 314 weeks, we've issued over 17,400 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Since the markets opened last night at 6 p.m. Eastern, put out 20 alerts Still waiting on the outcome of 6. That gave us 14 actionable alerts, of which so far nothing has stopped out. Last week was a good week. Find it and I'll show it to you. There we go. Last week, this was the final recap for the week. We issued a total of 95 alerts. 10 never triggered. That gave us 85 actionable alerts, of which 11 or 13% again would have been stopped out based on market structure. And that simple 3-step process we teach all of our passport holders in their one-on-one mentoring sessions. So last night at 6 p.m. Eastern, that's when the Monday session starts. For futures traders, stock traders have to wait till Monday morning at 9:30 a.m. Eastern. Week 314, coming out of the gate. We had a gap fill, and there was no entry on the first trigger based on that 3-step process. We had a short on the ES. We had a long gap fill on the Dow. That one made it to the tick. We had a short on the Dow. Gap did not fill on the Russell on the first trigger. We had a short on the Russell. NQ gap fill didn't happen. Not yet. That's one of the ones we're still waiting on. There's a short on the NQ. No trigger yet on crude. That's a short. I guess I should explain. S means sell. T is initial target. Then potential support. That's your second target. Potential support. That's your third target. Now, when you see a B, and there's not a lot of B's in here except for the gap fills, B means buy. T is initial target. The initial target is designed to help you get your goal for the day. And then to fill the gap, we would need to see 18,493. We had a short on crude. We had a short on gold. We had a long on gold that has not triggered. This was a short on silver, a long on silver, another long on silver. Oh wait, there was a short on silver, then a long. S is sell, B is buy. Here's a short on crude. There's a short on the ES, short on the Dow, short on the Russell, short on the NQ. Now, when one gets stopped out, you'll see a big red X like that. Okay. So that's everything that we've done since the markets opened last night. I have only put out one alert today. That's it. So, purpose of the logic alerts is to help you learn to read the chart. Okay. So that you can spot the entry points. As you saw with the logic alerts, each one has an entry price, an initial target, quite often many additional targets, and then a final trade to target. That's what you use to learn to read the chart and to spot the windows of opportunity, the obstacles or targets, where the entry should be, all of those things. That's what you learn with the logic alerts. They're not designed so you can just trade them and not have to worry about learning how to trade. That would be a huge mistake. And I know some people do that, but there'll come a day when you're at it. So please use them as they're intended. Now, the concierge trade alerts. They're posted as a static report shortly after the Globex open. So last night it was at 6:40. The logic alerts can come out anytime around the clock, 2 a.m., 2 p.m. Futures trade around the clock, and we have traders around the globe. The CTAs, again, it's a static report. It's usually out by 6:15, 6:30. Last night, I decided to put the logic alerts out first. I usually put the CTAs out first, but I switched it up last night. So that's why we were running a little later than normal. So every one of our members and trial members had all of these targets last night at 6:40 p.m. Eastern. So what do you do with this report when it comes out? First thing you do is go to the 30-minute chart of whatever markets you actually trade. Make a note where price is at the time the report is published. It'll always be between these two numbers. Okay. Then draw a line in the sand at the long target and a line in the sand at the short target. That helps you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now the BBC is the green line will see on all my charts. It stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. That part's really quite simple. Now the BBC, while it's used on the 30-minute chart for the purpose of the logic alerts and the concierge trade alerts, it can be applied to any time frame. Daily, weekly, monthly, 5-minute tick chart, range chart, doesn't matter. Functions the same on whatever market and whatever time frame you choose to use it. Concept is the same. Above the green line, bullish. Below the green line, bearish. Now, this is where you yourself learn to look left. Spot the entries, spot the targets, and by now you should be getting a pretty good idea of how price behaves at a weekly trading zone. Price is always trying to reach a weekly zone. From the moment the markets open Sunday night, so they close Friday afternoon. Price is above the 30-minute BBC, it's trying to get to the weekly zone above. Price is below the 30-minute BBC, it's trying to get to the weekly zone below. Now, the zones are published Monday morning at 6:15 a.m. Eastern. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. Published the zone since December 14th, 2009. So this December will make 15 years. Beyond that, just resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple to reach your goal today. Trading's not easy, but it can be simple. So here we are on the S&P daily chart. Now, we don't trade the daily chart, but we go to the daily chart for important information. This arrow is pointing at the bullish cross that took place. That's when the blue line gets above the green line. The green line is the BBC, bull bear cross. Okay, price crosses above the green line, and we expect higher prices. Price travels in legs, leg, retracement, leg, retracement, leg. We know eventually price will trade through the BBC. So then, when price pulls up to the BBC, the pullback holds more often than not, as it did here, as it did here. Remember last week I was saying I think we got a head fake on our hands? Wow. A lot of people got hurt there. Now notice where this high came in. These highs at the previous bearish cross. These arrows down here are pointing at the previous bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. Now this morning, there was such selling pressure, we spiked it, but then we came back up and we just sat right on it for quite a while. In fact, I'll show you. I've got pictures. Previous bearish cross held so far. See, on this one, it's sitting right on the line. Now, again, we spiked it. But this picture and this picture were taken 38 minutes apart. So it's really important that you understand how important that bullish cross is. And it, even though we spiked it, it became a true line in the sand all morning. We blew through the 62% fib retracement. The previous bullish cross could become support. This was, even though we spiked it, upcoming news in 1 minute will let us know. And after that news, these guys came out. It held, and it held, and then it bounced. And none of our traders should have been surprised. Now, we continue any lower. I'm going to take these fib retracements off the daily chart, and I'm going to do reverse fibs, which means I will, instead of drawing from this important low back on April 19th to the all-time historic high, I will draw reverse fibs from the all-time historic high to the current low. I'm going to wait and see how we close today before I make that decision. But if I decide to do it, I will do it during tomorrow's live broadcast. Now, all of the alerts that went out last night were based on last week's weekly trading zones, because the new zones don't come out till Monday morning, this morning at 6:15 a.m. Eastern. So the one alert I put out today is based on this week's zones. Everything last night, the previous week's zones. Zones have carryover power. In other words, what was working all last week is usually going to bleed over into Monday, sometimes into Tuesday. Now, in some of the markets, we came pretty close to the lowest weekly trading zone today. Now, historically, going back almost 15 years, if we hit the lowest weekly trading zone by Tuesday morning, that typically means that price is going to be at the other end of the spectrum by the end of the week. Does that happen 100% of the time? World of trading, there's rarely much that happens 100% of the time. But does it happen more often than not? Yeah, it sure does. Okay. Now, the reason I brought up a daily chart is I want you to make it a part of your routine, no matter what you trade, whether it's futures or stocks or crypto or Forex or ETFs. Spend 2 minutes with the daily chart before you go to the smaller time frames and start getting tunnel vision. Okay. Institutional traders, the ones with accounts in the hundreds of millions, billions, trillions of dollars, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size and the incredible size they trade in. They literally move price. So for the last 3 days, Do we know which way the wind was blowing? Did we know which way the wind was blowing here? 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 What you're doing by spending 2 minutes with the daily chart of whatever you trade, you're literally looking over the shoulder of the deep pockets that actually move price. Michael should be here any minute to give us a recap of what happened in the live training room. We'll go ahead and jump over here. Now, as you can see, Friday, this was Friday's close. We closed above the lowest weekly trading zone. But when we opened last night, we came right down to the target. And then we came down to last week's lowest weekly zone. We got a leg and we got a retracement. When price retraces to the BBC, let me just say this, price always reverts to the mean. In our case, the mean is green and we call it the BBC, bull bear cross. Okay. So, as you can see, whether you're pulling from above or pulling up from below, pullback holds more often than it doesn't. But eventually, price will trade through, as it did here. And where did it find resistance? Over here it found resistance. This is what I call resistance times 2. The BBC, we expect that to be resistance till proven otherwise. And the zone, we expect to be resistance till proven otherwise. We got above the BBC, but we ran into last week's lowest weekly trading zone, and it became the resistance. However, this pullback to the BBC should hold. And that's because, as you can see, red and falling has now turned to blue and climbing. Okay, that's bullish. So we have a bullish scenario here for price to overcome this zone from last week. And you're going to have potential resistance here, here, and then there's a gap to fill. There's been no reason to think about the long target as of yet. Okay, Michael is here. So when I come back, we'll pick up where we left off. We'll finish the recap of the alerts. And we'll wrap things up with our good word for the day.
Excellent. Excellent.
All right.
Here we go.
Looks good.
All right. Good afternoon, everyone. Today is Monday, the 5th day of August, 2024. Now, I just had this thought. If you have not taken a free trial with us, go here to mytradingiq.com and right up here on the purple button, it says sign up for your free 5-day training now, 9:15 to 11:30 Eastern time. Click on that. Now, there is no credit card required for the trial when you do that. Right? When you click on that, it will be brought to this registration page. Hey, they're both the same thing. All right, be brought to this registration page. All you have to do on this page is give us your name, your email, and your phone number. There are 5, oh wait, they're not the same page. There are 5 multiple choice questions. One was for the afternoon session. There are 5 multiple choice questions, so just fill those out. And then down here, if you have an trader, give us your machine ID. If you have TradingView, give us your login ID. Once you do that, we will set up your indicators for you so you can get them indicating on your charts. On the first day of your trial, I'm just going in to see, hang on, let me scroll up and see. Latoya, if you do not have your indicators indicating, type into the question box and let me know. If you need help setting them up, let me know. I will do that for you, okay? Part of the trial, this is one-on-one stuff. All right, so that is how you take the trial, all right? You should get your indicators indicating and all that stuff. Now, the spreadsheet. If you are going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 5th day of August, 2024. I almost said April. Today we made 0 ticks on the Russell. We didn't trade the NQ. We made 0 ticks on the Russell. We made 21 ticks on the YM and 68 ticks on the ES. So we're up $955 a contract. Today it took us 10 minutes and 2 trades to get to the goal for the day. At that point, we're up 9 ticks on the ES, I believe. And that put us at $2,250 with 20 contracts on. We took a total of 21 trades this morning. So we had a lot of trades again. Not as many as Friday, but 21 trades, which is still a lot. On the month now, we're at 3,405. That's over 3 business days. Actually, no, on Friday, I didn't have a lesson plan. So if I didn't have a lesson plan today, I might have had double that number of trades. I probably would have had more than that because it was just wild today. It was even more wild than it was on Friday. Anyway, on the month, we're at $3,405 over 3 business days, averaging $1,135 per contract per week session. On the year, we're now at $61,357. That is over 144 business days, averaging $426 per contract per morning session. Over here at the 2420 Blueprint, we are on our final month of the 2420 Blueprint. We are up to 20 contracts now. 20 months, 20 contracts. And if you started the 2420 Blueprint this year with just 1 contract and quit trading when you got the goal for the day, the goal being $100 a contract, and added 1 contract a month, you now be on your 8th contract. You would have only had to work 46.63 hours so far this year. You would have made $79,301 gross. That's not net. And you would have averaged $1,700 per hour gross, again, not net. Total number of trades, 687. So if you do 687 times whatever your commission is, 687 times whatever your commission is, subtract that from that. Up here, we do have some totals with commission, right? With an $8 round turn, that's what your total would be so far this month, and with a $5 would be that so far this month. But that's not for getting the goal. That is for total number of trades. Okay. So if you started with me at the beginning of last year, yes, beginning of 2023, you'd be on your 20th contract right now, and you'll be averaging $6,951 per hour. That's what I do right now. This morning we traded for, what was it? 10 minutes, right? 10 minutes. And we're at $2,200 an hour. So if you extrapolate that, 10 minutes times 6 is 60 minutes in an hour. That times 6 is a lot more than that number down there. But that's how that number grows. Because as you add contracts on, it ends up being exponential. All right, enough about that. Let's get into the trades that we took. Okay, on the YM, we didn't take anything on the NQ, right? And on the YM, we just had a few trades. You see the YM is on a 31 range. The Russell is on a 15 range. The ES is on a 7 range. Okay, the markets were wild this morning, so we bumped the time frames up a little bit. Now the bracket that I'm using on the YM is a 9 by 12 point bracket. So it's a 36 by 48 bracket is what I'm using. Okay. And what that means is my stop is 36 ticks and my target is 48 ticks. All right. So the trades that we did take in here, our first trade was right here, and we picked up 21 ticks on that. And every trade after that was a break even. A break even there, a break even there, a break even there. I believe that was all that we had. So if you're just doing the blue arrows, let's say you just do the blue arrows. Well, I took 21 ticks profit on this one, but this was the first blue arrow. That was enough to get the stop to break even. It would have been a break even for me. Same thing here. This one I would have taken some profit on. Actually, I wouldn't have because this one didn't put in lower swings. So this one doesn't really count. This one I would have taken a break even on. Probably I might have taken a little profit on it. I don't know. This one probably would have taken some profit on it. Went about 30 ticks in profit. This one I would have had a break even on. I did have a break even on, and you couldn't do this one because this one didn't put in a higher swing. If I would have taken that, it looks like it would have been a break even for me, and that was the day. Knowing how I trade, knowing that I would move my stop to break even after 10 ticks in profit. Right here it went about 20 ticks and then it came back down. This one went about 15 ticks and it came back down and it gave me the break even. This one went straight down 30 ticks or so. I would have probably gotten the full 30 or something like that. Now my target was at 48. I don't know if it went 48 though. 803 down to 748. It did. It went 55. So I might have gotten the whole 48 ticks on that. This one here, I would have just gotten a break even on. Okay, knowing the way to trade, following the rules that I have, and knowing the way that I trade, that's how that would have worked out. On the Russell, we were negative pretty good on the Russell at one point, and then we had one good trade that brought us back to break even. Go back to the beginning of this. Wow, there's some movement in there. All right, so we started out with a break even here on the Russell, and then we stopped out on this I don't know what the heck I did, why it's up there and why it's, I don't know what I did, but I ended up stopping out on that. And I stopped out on that. Now that first one was a 10 tick stop, but the second one was a 20 tick stop because they had changed the time frame in between there. In here, it was on a 7 range. I think that's why this doesn't look like it's on top of anything. If you look on the 7 range, it's probably right on top of something there, 7 range. You know what? I'm not going to do that. But it was, I think I took that one from the 7 range and I stopped out on it. Is this today? Yeah, this is today. I'm going to go back there now. Sorry, it's still calculating up here, doing something. Here they should be. Here they are. Okay, so I stopped out on that one, and then I went to the 15 range and a 20 tick stop, and then I stopped out on that one. That put us at minus 30 overall. All right. Then I missed the blue arrow there. I missed the blue arrow there. One would have been a win. One would have been a stop out. Missed that blue arrow, which would have been a nice 30 tick win. Missed that one, another 30 tick win. And missed that one, would have been some kind of win. Missed that one, which would have been some kind of win. Missed that one, which would have stopped me out. And I don't have the next trade. I did have one trade in there that I got 36 in profit on. That goes to break even. It might have been that one. It might have been one of the other ones. But I got 36 in profit on it. And that is where we ended it for the morning session. Okay, now during the break, let's see, during the break, I'm just going to go to the blue arrows. Blue arrow right here, that would have been a nice 30 tick win. Now, Latoya, and anybody who's new in here, I'm saying 30 tick win because I had a 20 by 30 bracket on that. Right? When I changed it to a 15 range, I put a 20 by 30 bracket on. In here, there were no blue arrows, just black arrows. Now, I think tomorrow we'll get into the arrows. And so the arrows will make more sense to anybody who doesn't know what generates the arrows, why the arrows are generated, where they're generated, and how you can predict them being generated. All right. Now this this is there we are. All right. So this is the ES. Now we started out with a break even on our first trade of the ES. This is where we got the goal for the day right here. We picked up 9 ticks profit on that. Must have got it right there before I pulled back down to here. I don't know exactly how it happened. The ES, I don't know how the trades were working on the ES so much. My fills were getting filled in weird spots. But it was all over the place. And the ES I kept on the 7 range. There was another blue arrow right there that I didn't get. There was one here. We went from 9. Now the ES we had the most, oddly, we had the most trades on the yesterday. We went from 9 to 21. So we had right there a 13 tick trade, it looks like. Is that right? Yeah. 12 tick trade, sorry. Went from 9 to 21. And then we went from 21 to 37. So we had a 15 tick trade, 16 tick trade. Okay, then somewhere in here I stopped out because I went from 37 down to 27. I don't know the stop out. It must have been this green arrow right here. Then I went from 27 to 31, so I got a 4 tick, and then I think I had a bunch of small ones right in a row. I had a 4 tick, and I got another small one. I went from 27 to 31, which is 4 ticks. I went from 31 to 34, which was 3 ticks. I don't know where all these little trades are. Then I went from 34 to 38, which was 4 ticks, and I went 38 to 42, which was 4 ticks, and 42 to 46, which was 4 ticks. And I don't see all those little trades in here, but I know I took them. And then let's see, our last stop out was right there at the end. Okay, well, anyway, we went from 46 to 62, and then 62 to 78, and then we stopped out. So this is where we went from 62 to 78, and then we stopped out right here and went down to 68. And that brought us, I think, anyway, I think that was the end of it, right? Yes, it was. Again, that brings us into the break. Now, during the break, we'll just look at the blue arrows. It was a perfect one right there, but it was going right into the zone. So I would have skipped that. But this one right here, I would have taken and got some profit on. This one right here was a really nice one. I would have gotten some profit on that. And I had a 30 tick target on my ES trades. On all the 7 tick range trades have a 10 by 30 bracket. And so I had a 30 tick target on those, but I didn't hit 30 ticks on any of them today. I did hit some pretty good ones, so better than normal. This would have been one trade. This combination right here would have been one trade, and it would have been a break even for me. This would have been some profit. This would have been nothing because it's going down into the zone. This would have been some profit. And that brings us current. That was it. So it was a busy day, and we didn't even do the NQ. Now, if I throw the NQ on here, now I'll just go over a little bit with the NQ. I had taken the other oscillator off of the bottom down there because there was enough to look at. But let's put the NQ on a 100 range. Okay, on a 100 range. And so here on a 100 range with the NQ. Now 100 range is, you're gonna have like 110 tick stop with that. So that would be $150, I mean a $550 stop, unless you use a micro. If you use a micro instead, then it'll be a $55 stop, which is something that is certainly feasible. And if we go back to the beginning of the day, you can certainly see this would work out in here. Now, do I have everything turned off in here? It looks like, yeah, I got all the arrows turned off. Let's turn on some of the arrows here and see what arrows actually triggered in here. This must have been from the lesson plan last week on Friday, but I shut everything off. Okay, so let's minimize this slingshot and just look at this. Now, this is where we're going to be in the future. Okay, in the future, this is where we're going to be. We're going to be in larger time frames, and we're going to be using not necessarily this, but something similar to this. It's going to be a mix of these two, I think. And when price pulls back and it hits the ribbon and the ribbon is spread, anytime the ribbon is spread, it doesn't even have to hit the ribbon, but anytime the ribbon is spread and you come out of the oversold, dink, dink, dink. Anytime the ribbon is spread and you come out of the oversold, you can take a trade. You know, it's better if it comes out of the oversold down here. Did I just say anytime the ribbon is spread and comes out of the oversold, you can take a trade? That's true. Yeah. Anytime the ribbon is spread and it comes out of the oversold, it doesn't even have to touch the ribbon, like this one right here, for instance. Okay. That's where I want it to be in the future. We're going to finish the 2420 blueprint doing what we do, doing what we've been doing for years and years. But I want to make this easier for everybody. I want to make it so it's not just me in there racing around taking trades. I want it so everybody can get in here and do this stuff. And with this, your stop with a single micro would be 55 ticks. All right. I'm sorry, 105 ticks. Your target would be like 150 ticks. So your stop's going to be $50, $55. Your target's going to be 75 to 100 bucks. So the risk reward is still good. And you can run those targets way out there. On 100 range, you could run it out to 200 on really volatile days. 200, 300. And you can trade a couple of the micros if you want to. So your stop would end up being $110 instead of $55, and you have the potential to make a whole bunch of money, $500-600 with a single trade. That's where I want it to be for you guys as we keep moving forward. Okay, this is what it looks like today on a 100 range bar with the wild market that it was today. There was a spread. There's probably still a spread right now on the NQ. I don't know my NQ down is. Hang on, let me find it. Let me find my NQ down. Here it is. Let me hit go to last on that. Yeah, there's still a spread. It's still like a 5-tick spread on the day. See, I don't want to trade that. I don't want to trade that. That's the regular NQ. Now, this is a micro NQ. It does not have a 5 or 10 tick spread. And if I hit auto sum bid ask on that and I hit apply, it does not have the same spread, and See, it's got like a 1 or 2 tick spread. The totals are still really low down here, but it's more tradable. So if you want to trade, 2 or 3 of those instead of a regular one, I would suggest it. I would actually even recommend it if you want to trade the NQ, even though it's wild. All right, so it is 110. Now, for those of you guys that are just tuning in into the YouTube, if you have not taken a free trial with us, come here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial, right? No credit card required for the trial. Click on this. It's going to be in here. In here, all you ask for is your first name, your last name, your email, and your phone number. In here, there's 5 drop downs. Fill those out, and there are multiple choice questions. Okay. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. That's all that we need in there. Right. Once you do that, you should be all set. Now, again, Latoya, you didn't respond when I said something earlier, so I don't know if you're listening or not. But if you need any help, I gave you the number to text me at earlier. If you text me at that number, just put your name in it. If you need help setting up your platform, if you want to have a one-on-one session quickly with me, just let me know. That goes for anybody, really. You all know my number. All right, so let's get in here trading. We have a blue arrow short over here on the YM. Now, it's not too late to get into that because it hasn't gone 10 ticks into profit yet. Right, the entry would be right here at 46, and it's only going down to there. Now, it's too late to get into it, but I'm in it. And it's gone to the point where I would move my stop to break even, so I'm going to just move my stop to break even. And so I believe I have, the target is way down there at 895. Right down here is the swing low. It should make it down to the swing low. So it should make it through my target right here. All right, my target is at 895. It's a 50 tick target. It should make it through my target. Okay. So I would be a fool not to lock in something right now. So I'm going to lock in something. Just 5 ticks. All right. And we'll let it run down to the target. This is where I want everybody to be in the future. Nice, easy, slow trades that you can do, that everybody can do. All right. Okay, over here on the NQ, you see we are kind of jammed up right here. The ribbon is all flattened out, so no trading there. I'm going to put the NQ back anyway. I really don't want to trade it today. So we got 5 ticks profit on this move right here. We expect it's going to get down below here. Now, why do we expect that? This is in Wednesday's lesson plan, the leg lengths. It should exceed the prior swing low. Why? The diamond principle. That is also on Wednesday's lesson plan. Okay. So make sure you're here on Wednesday. That's what. It's a full 5-day plan. Actually, it's 4 days. Fridays, I like to just trade. But you see, this is going down. It should go through the prior swing low. And the leg length on this should be, let's grab the leg length. This is kind of a tough one. I'm going to grab it from right here. I'll do this right here. Okay. So from there down to there, which it hit, and then from there down to here, which it should do. Right, 842 is what this should go down to. And I could do it from there, or I could do it from right over here. They're roughly the same plot, same place. But 842 is what it should go down to right now. Why? Because it should exceed the prior swing low to continue the trend. Because the diamond principle says this is the shape. So over here, somewhere is where it should get down there. Over here in time. Okay, this amount of time right there. Makes sense. So it's not there yet. We got out of that at break even. We don't have trades anywhere else right now. It is 1:15, so I have 15 minutes left in here. 15 minutes left in here. All right. The ES at the blue arrow over there. Now this green arrow that we got right here, you cannot take because this blue arrow did not continue the trend. So that is not a valid trade there. However, the ES trade is, sorry, stumped to break even on that. Okay, now the ES should go right up to here, right there. That's where the ES should go up to, 46. I am gonna lock in 12 ticks on that. And it just hit me at 46, so I'm out. I am out. I think it hit me at 46. Did it not hit me at 46? It did hit me at 46. Okay, good. It hit me right at 46. All right. Now, that is in Thursday's lesson plan. How to read the DOM to know where the market should go. All right. That 46 number that I just put that on, it went right up to 46. It took me out, and it's coming back now. So I don't know what I got on that trade. It was like 20 ticks or something like that. It was a good one. I will tell you. Let me look and tell you exactly where my entry was and my exit. Okay. Down here at the bottom. It was 41 up to 46, so it was a five-point trade for 20 ticks. Okay. This is what it looks like on my end. $41 to $46. Okay. Now the green arrow was a valid trade that I wasn't looking at. It did not put in a higher swing, so you can't take another trade in that direction now. I didn't get that. The Russell's about to give us a trade here that I can take. Let's get a low here at 50.7. So it's going to be 8 points from the bottom, right? No, 4 points from the bottom. 50.7, so 54 point. Nope. Never mind. It's a 15 range. I'm sorry, so it's going to be 51.7. 51.7 right now is the buy stop limit on the Russell. Now, this has to come out of the oversold. Oops, that's changing. It's changing. We cancel that right now. That number changed. It's now 50.2. So add 15 ticks to that. 51.7 was right. Okay, 51.7 was right. And it came out of the oversold, but it went right into a no trade zone. I was afraid that we weren't in a strong trend here. That's why I canceled the order. And I thought I did my math wrong. All right, it is now 1:19, so I have 11 minutes left in this session. I want to tell you again, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Click on that purple button. It will bring you to this page where all that we ask for is your name, your email, and your phone number. Down here, these are all multiple choice questions. All right, choose whatever you want on that. And NinjaTrader, if you have it, give us your machine ID. If you have TradingView, give us your login ID. That is all we need to get you going. Okay. Your indicator is indicating on your desktop, which is what you should have when you start the trial with us. All right. So we're in no trade zones everywhere. Let's go look at other stuff. Let's look here at the Bitcoin. Wow, Bitcoin took a hammer in this morning. Wow. Yeah, that's blowing away all the lines that we've drawn, everything else that we've drawn on Bitcoin. This is on the daily. This was over the weekend. It got hammered over the weekend. This is probably a buy-in opportunity for Bitcoin. Let's look left a little ways here. Let me crunch this up and we'll look left and see if we can figure out a good stopping point. Yeah, well, below that, it's all the way down here, 42,800. Be the next level. We see this blue line that I have drawn right here. That would be the next level down. It hit this one that we drew a while back. Right here is the support level. That was a fail-safe support level. We had it in here and in here. That would have been a good buy-in opportunity right there. This is not looking good at all, though. From a structural standpoint, this is ugly. We had this blue arrow back here.
It's all explained in 2 words. From futures to stocks to crypto to Forex to ETFs, 2 words. Kamala Harris.
There you go. 2 words. And this to this right here was a good run. I thought we were going to get up to the yellow line that I had drawn up there, but we never made it quite up there. And this is a mess right there. That is a mess. Man, I wish I would have done what I said I was going to do on Friday. But I didn't do any of it. So I'm stuck with the calls and I didn't get the puts. Anyway, this is shaping up from not Bitcoin, but the ES is shaping up on a bigger picture to make a big run. All right, I don't know what the catalyst is going to be for that big run, but it's shaping up to make a big run. That's what happens after you get a big crash. Eventually, you get a big run that's going to overcome. Markets aren't made to go down; they're made to go up.
We very well may see that emergency rate cut this week.
Yeah, it'd be a thing, wouldn't it?
Well, if there was ever a time for it, now would be the time. Although that's not the job of the Fed to shore up the markets, but that's what it's become. Thomas Jefferson, when he warned us against, he says, if you ever want to destroy America, just create a central bank. And here we are.
And here we are.
$35 trillion in debt.
Stop to break even. The ES gave a blue arrow right there, by the way. I'm going to lock in 4 ticks on that. 4 ticks and get rid of my original stop. Okay. So this has a 30-tick target on it. It should go up to the weekly trading zone. That's why, if you remember this morning, those weekly trading zones are like magnets. They generally suck price right into them. So that would be a great point for a target. Now, I just got out with 4 ticks in profit on that. But it should put in a higher swing. It should get up to the weekly trading zone. I know it's not doing it right now for me. Not yet. But it should do it on the second push right here. Probably will. Okay. Wow, I didn't realize Bitcoin got hammered that bad. I looked on my phone. My phone has some stuff on it. I guess we could just look over here at the website too. We got this running on the website right here. Bitcoin down $3,500 today, 6%. Ethereum down 8%. Gold, $5. The indices getting killed, minus 3.62 on the Russell, minus 3.77 on Apple. Crazy. I'm just watching this stuff on the ticker right here. Go by.
The Nikkei down 12% today.
12%
in one session.
That's a haircut.
Now they raised their interest rates, and so the yen carry trade that so many sophisticated investors have used for so long, that got shot in the foot with that rate hike. And in fact, I shared an article with the audience earlier before you came on. While I said what I think's behind it all, they say it's the yen and what the Bank of Japan did. that's behind it. So take your pick. Probably a little bit of both.
Yeah, probably. Crazy times right now. Wow, market is a mess.
The VIX made its greatest, I think, one-day rally or move up today in history. I shared that article too. I don't remember the exact numbers.
I had a VIX. Here it is, right here. I had a VIX layout. So this is the VIX on a 1-minute chart. And I don't know what I was.
I think you'd have to go daily to put it in perspective.
Yeah, I don't know what I was looking at with this, but let me go to daily. Daily. Here it is. All right. Oh, I was comparing the VIX to the ES. That's what I was looking at. Okay, so on the daily, the VIX is actually showing down right now on the daily. This VIX is.
Now, are you showing that on the 1 minute as well?
No, it's on. Oh, wait, did I do the wrong one? Yeah, I guess that's on 1 minute. Here it is. Yeah, you're right. There it is. There it is right there. I was going to say, what the heck? Yeah. Okay, so the VIX did go way up here. It's dropped off the high, but that's 65.73. That is insane. A huge move on the VIX, and it's
The bullish cross I showed you guys when we were looking at the daily chart. That's where the market finally found footing. It spiked it, but it found footing, and it's held so far. And there's a whole series of pictures in the discussion group, both in the passport and in the trial discussion group.
and this stuff that is right here, guys. This is the ribbon. It's just got the leading and trailing edge of the ribbon on it. It's the BBC and the BB3 right here. That's showing what Dwayne was just talking about was the cross he was talking about was the MA1 BBC cross. Right, if I shut the BB3 off. He's talking about this one right back here. This is the cross that he's talking about right there. Okay. And we have this cross right here that acted as resistance right there. This cross right here that acted as support. So we're probably going to bounce around in between there for a little while. There's a huge space in between there to bounce around, but that's probably what we're going to do here for a few days anyway, I imagine. This is big though, down here on the VIX. If I change this to a VIX, VIX, volatility index. Let's see where we got the cross was way back here. Way back here. Yes. Interesting stuff. Interesting stuff. All right. I know I had a VIX layout. I didn't know the VIX was going to be crazy like that. That is what it is. Back here, we'll see what we have here. So we had some really nice trades in here this morning. What's afternoon, I guess. On the Russell here, we're just about to have another one, but the outer bands are completely flat. We don't want to take that. Here on the Russell, that is, did I say the Russell a second ago? I meant the YM. The Russell's actually got a ribbon trade right here. Actually, it's not. It needs commodity oversold. If a commodity oversold on an up close, then we'll have, at the very minimum, a ribbon trade. It could be a blue arrow, could be a purple arrow, could be both blue and purple. If it hits the black line, then it's possible it could be a green arrow now, or no arrow. If it closes down, it's going to be no arrow. No arrow is what it is. All right. Well, that's going to be it, guys. I think we're going to wrap it up here. It's just about the end of my part of this session. If you have not taken a free trial with us, go out here to mytradingiq.com. Click on the purple button right here. There is no credit card required for this trial. Click on that purple button. And you will be brought to this registration page. On this page right here, all that we ask for is your first name, your last name, your email, your phone number. These are all multiple choice questions right here. There's 5 of them. Answer those, and then down. Make sure you answer it correctly. If you choose the wrong thing in here, like are you a partner, and if you say yes when you're not, that's not going to work out to your benefit. If you're trying to take the trial, that's going to work out to your detriment, because you won't get emails. That puts you in a different category, and you don't get emails. So just answer them honestly, okay? On NinjaTrader, give us your machine ID if you have NinjaTrader. And if you have TradingView, give us your login ID. The login ID is this thing right over here. When you hover over this, I'm logged into CFRN right here. Right, when you hover over that, that is what your login ID is. It's trade right here on the ES. And that's it, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep.
And I got to break even on that last trade I just took. All right.
Okay, recap of the morning session.
Today it took 10 minutes and 2 trades to get to $2,250.
Good job.
Thank you. Thank you.
Okay, guys, we'll pick up where we left off. Already looked at the daily chart. And we're coming back to test that bullish cross again. Now, I showed pictures. We did spike it early. But then we got back above it. And then the news came out. And I still have those pictures queued up. Yeah, it looks like no, don't. Yeah, here they are. This news came out at 10 a.m. Eastern, and as you can see, we'd already spiked it, but it came back to where we would expect to support. That's just because of the incredible volatility. We just saw what the VIX looked like. And then 38 minutes after the news came out, bullish cross still holding us support. And then after a bounce, we came back to test it again. And so far it's held. It's the last picture that I posted. So that's what it looks like now. Okay. Wherever you have a bullish cross that leads to an extended move, first time price revisits that area will almost always be good support. Right where the bullish cross happened. Just as here, where we had the bearish cross, what do we get? Double top right there. See it? Okay. All right, moving on. Now again, these are last week's zones because all the alerts that go out on Sunday night are based on last week's zones. The new weekly trading zones come out Monday morning, 6:15 a.m. Eastern. Now, this was the lowest weekly trading zone last week for the ES. You can see this is where we closed Friday afternoon, well above the lowest zone. Last night took us below the zone, got a leg and a retracement, leg and a retracement. But once red and falling flipped to blue and climbing, it gave us fresh breath and right up to the zone. When price moves up to a zone, we expect resistance. When it drops to a zone, we expect support. 70% of the time, you'll get consolidation. 20% of the time, rejection. 10% of the time, the slice. Now, I said earlier during this broadcast that I thought this retracement to the BBC would hold because we had the support of blue and climbing. Okay, and that's presenting you now with an opportunity to trade 52, let's call it 5260, 5280. That's a 20-point trade, 5260 to 5280. And that doesn't get in the way of any of this week's new zones. And on tomorrow's broadcast, you'll see this week's zones that came out this morning. See how when we hit a zone, the market consolidates or it gets rejected. Consolidates, rejection. Okay. So we're sitting on top of the BBC, which we expect to be because we've now opened and closed above it. That's changed the structure of the market. Resistance will always send the market looking for support. Support is now going to send the market looking for resistance. which could be this high. We're pressing up against the step line because it's directly above price. That could be potential resistance. You got to understand, guys, that the world is running scared. I don't want you to be. Okay? We'll all come back. I can't tell you how long it'll take, but it will. Now, I'm speaking of the indices. Individual stocks can go to zero, but the indices never will because of the way they're constructed. Now, there is such a Black Monday vibe out there. It's possible could drop through blue and climbing, okay, and head lower. Keeping in mind, on the daily, we've already taken out the 62% fib retracement. Remember last week when I was talking about, hey guys, I think we're going to at least go to the 50? Remember? Yeah, well, Friday we closed below the 50. We opened last night. We moved higher just a little bit. We had a little tiny green candle, and then everything, the heck in a handcart. But we've had quite a bounce off the low of the session. The low of the session, so far, 51.20. And we're back up around at 52.43. Okay. And again, if you look at those pictures in Telegram and the Passport discussion group or the trial discussion group, you'll see how price held right at this area for a couple of hours. Okay. We've already covered this. Let's go to the Dow. Okay. Now, this was the lowest weekly trading zone last week for the Dow. Okay. But we closed above it on Friday. Gap lower on the open last night. Filled the gap. Blue and climbing, rolled over to red and falling. We're below the BBC, so we're only thinking short here. Okay. Remember, bull, bear, cross. Bearish below it, bullish above it. So we get down to the target, we catch a bounce, we back to the target, we consolidate, then we drop through the lowest zone from last week. And when the market finds support, what does it do? It bounces up to the BBC, which we expect to be resistance, until proven otherwise. So then we go back down to the step line, which becomes support. It's directly below price. That sends us back to the BBC. We actually close above the BBC. You see this high right here? Okay. Failed to take that out. I mean, there's maybe a tick or two there. So we reversed, come back down to the zone, which is 38,860/65. That's bounced us up to resistance. So price right now is pinched between resistance and support. So you need to be patient or go look at another market. There is no valid trade opportunity based off this at the moment. Now, that will most likely change. If price were to trade below the zone from last week and get below blue and climbing, then 38,820 down to 38,780. Give you 40 points. You only need 20 points to get your goal for the day. On the Russell, this is a haul of last week. Oh, I don't think I said the vertical line separates today, Monday. This is Friday. This is Thursday, Wednesday, Tuesday, last Monday. And you can see how price goes from zone, zone, back to the zone, back to the zone. High of the week came in at a zone. Now, the Russell, I believe, is the one market last week where we did close below the lowest weekly zone. Doesn't happen a lot, but occasionally it does, and it did. Here's where we opened last night. We dropped right to the target. Got below it. Now this is interesting. The step line crossed, which tells us to expect a retracement to the BBC, but there was so much selling pressure. step line recrossed. When you've got the step line on the left side of red and falling, you got price, step line, red and falling. I call that the perfect stack, okay? Now with the Russell, you only need 2 points. This candle right here, open 2107.5 and drop to 2092. That's 15 points in that one candle right there. 15 points. You only need 2 points to get your goal for the day. So we came down, leg, tracement, leg. Now we could go over here and find out where this support came from. But if you want to learn how to trade, I'm going to encourage you to go find it yourself. Because then you'll own it. It won't just be something some guy said on the internet. Anything I ever tell you, even you may think, oh, you know, he's a nice guy, so it's probably true. No. You need to vet everything. Everything when it comes to trading. Not only to find out if it's actually true or not, but in the process of vetting it, you own that information. It'll become a part of your DNA, your trading DNA. It'll become part of who you are, how you see the markets, how you read the charts, and how you find windows of opportunity. Down here, got what's this low? This low's 2017. So you could go 2021, 2017. That's 4 points. You only need 2 points to get your goal for the day. Okay, the last of the indices, the NQ. We closed on Friday. We came down to the lowest weekly trading zone and then bounced up to the BBC resistance, which sent us down to red and falling directly below price, which became support, sending us to resistance, back to support, back to resistance, and then the zone we couldn't get below on Friday, we gapped below it last night. Now with the indices, typically you only see gaps on Sunday night or during earnings season when a big name reports. Okay. Stocks, there's gaps every day because while you have to stop trading stocks at 4 p.m. Eastern here in the U.S., the Asian traders and the European traders, Europe opens at 3 a.m. Eastern, they're trading the same stocks while you sleep. That's why when the U.S. markets open, when they ring the bell on Wall Street, that's why you see these gaps up and gaps down almost every day with individual stocks. Not as common with futures. In fact, again, Sunday night and earnings seasons with big names. So we opened, we came right down to the target. And we continued to drop, putting in a double bottom. Now remember, that was last week's lowest zone. It closed above it, gap below it last night. Now, right here, we got back above the BBC. We ran all the way to the short target to the tick. See that wick? This was a green candle all the way up to the target. Okay, and I know that's the short target, but once you're below it, you should expect it to act as resistance on the way back up. Resistance will send the market to support at the BBC. We didn't quite make it back to the target here. We dropped, and in the next candle, we got through it, pulled back to it, and then this candle closed here. Something odd happened. Let me refresh this chart. back. Yeah, okay. Some issues here lately with CT Pro. So we hit this resistance. Okay. Chart's always going to tell you where to expect resistance, where to expect support. There's a good reason for this double bottom. If you really want to become a trader, you'll go find it. Okay. So we get a leg and a retracement, and a leg and a retracement. Market found support at blue and climbing, but then ran into resistance at the step line, directly over price. So as long as price stays above the BBC, and you have a nice window of opportunity right here. Oh, let's call it 18. Let's call it 18,200 to 18,270. Okay, that's that right there. That little rectangle, that's 70 points. At $20 a point, that's $1,400 per contract traded in that little box. If you've earned the right to trade 10 contracts, then it's 14 grand. But when you become a member, you don't start trading live. You haven't learned the strategy yet. You haven't learned to read the indicators yet. You haven't even learned to read the chart yet, the way we read it. You attend class every morning, ask lots of questions, and trade along in your demo account until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the 2420 blueprint will give you the green light to now go live with one contract. Now your goal that you're trading real money is to increase your account balance by 2 grand. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is the first contract is funded with your startup capital, the money you deposited to open your trading business. The second contract is funded with profit you earned in the market. Blueprint's going to notify you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. That's why it's called the 2420 blueprint. It's designed to help you go from 1 to 20 contracts over a period of 24 months. It's building in 4 months there for you to get ready to actually go live. It may happen a lot quicker for you, okay? But you only add 1 contract at a time when the blueprint says it's time, and you only add with profit you earn in the market. If you have the discipline to follow that, it will make it far more difficult to blow up another account. You'll have to break some rules, okay? All right, that covers all the indices. So let's jump to crude. Crude's pretty tame by comparison. This was the open last night. Remember, the vertical line separates today, Monday, which began last night at 6 p.m. Eastern. Here. Friday, Thursday, Wednesday. So we open, we run up to the BBC, which we expect to be resistance, and it was. And that sent us right down to the target. Support will always send the market looking for resistance, and resistance will send the market looking for support. Look left, you'll find the support. Support sends us to resistance, back to support, back to resistance. But now we got blue and climbing on our side. So we actually managed to open and close above the BBC. So we get a leg up, okay, right here. But we fail to take out that high right there. So we've now retraced back to the BBC. We got blue and climbing overhead and the step line. 73.25 up to 73.45. That's $200 per contract traded right there. Gold, we are on the December contract now. This is where we opened last night. Resistance at the BBC. Sent us all the way down to the short target, all the way down to the zone. Just as this zone provided support on Friday, it provided support last night. Support will send the market looking for resistance, which it found at the previous bearish cross. We have a bearish cross that leads to an extended move. First time price revisits that area, will almost always be resistance, and it was. And the market turned back down, found support at the target, bounced it up into resistance ×2, the BBC, and red and falling. And that took us all the way down to last week's lowest. No, it didn't. As a matter of fact, still 2 more zones below from last week. The previous weekly zones often will remain in play till Monday afternoon, sometimes Tuesday, and some weeks you'll have zones that carry over. Like there was 2 NQ zones that carried over from last week. 1 euro, 1 Russell, and 1 silver. So that's the carryover power of the zone. You'll see how we're consolidating at the zone. Even though the zone was published a week ago today, this is that carryover power I'm talking about right now. You got resistance overhead, BBC. But you got blue and climbing, which is bullish. Okay. Now we've poked through it, but we've not been able to close above it. What we really want to see is a candle open and close above the BBC. That gives us confidence that the market is going to attempt to rally up to this bearish cross, this high, and then potentially the long target. We hit the long target early last night. But as you can see, as the market sold off, created this bearish cross. So when price gets back up here, whether it's today, tomorrow, next week, or next month, still be good resistance right there. Okay? Put it in your journal. You should journal every trade you take. Silver, just destroyed. This was the open. We dropped to the short target. Dropped to the zone. Spiked the zone. Support sends us looking for resistance. And that resistance is just weakness in the market. Back to the zone. Never quite made it all the way to, but here's the deal. You only need 2 pennies in silver to get your goal for the day. Opened at 28.73. And we ran up to 28.81. That little candle right there is worth $400 per contract traded. Right there. So price comes down, hits the zone, support, sends it up to resistance. Now here, trade through the zone, find support at the next zone. We trade through the next zone. Now this is called the slice. The 30-minute candle slices through a zone like it's not even there. What typically will happen is when that slice runs out of steam, price will retrace back to the zone it sliced through, continue in the direction of the slice. This was last week's lowest weekly zone for silver. So on Friday we closed well above it, but today, now when the price of silver moves $1, okay, 28.80 to 27.80. That's $5,000 per contract traded. Right there to right there. 28.80, 27.80 to 26.80. What you're looking at right there is a $10,000 per contract move. You don't see those every day. I don't know that I ever have. Now, this is what I was talking about earlier. On Friday, we were at the lowest weekly zone for the euro, but we ran during Friday's session all the way up to the highest weekly zone. But we closed below. Last night we ran up and tested it off the open, pulled back to the BBC, the pullback held. Well, we already hit the target once, and we hit it again. So we get a leg and a retracement. Price pulls back to the BBC, the pullback holds more often than not, especially when you got blue and climbing in the picture. So off we go for another leg, and then a retracement. Pullback held, but now price is directly, blue and climbing is directly above price because it's on its way to becoming red and falling. One bullish, the other bearish. So right now, price is trapped. Got support at the BBC, resistance overhead at red and falling. And then your bigger picture support is down at this low right here. Okay. All right, one last look at the daily. So far, that bullish cross still holding. Now, the lowest weekly zone this week for the ES is 50.70. Right in here. 50.70. Came awfully close to it today. Okay. But as you can see, cooler heads have prevailed. And again, for hours, we just sat right on top of this bullish cross. Okay. And you can see the charts in the discussion group, both the Passport and the trial discussion group. Become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI. Send an email to support@cfrn.net. 9 out of 10 new traders fail because they simply don't have anyone to teach them how to trade. People buy books, they watch YouTube videos, buy some indicators and some oscillators, and it looks pretty simple. And then it's not. That's why we put so much emphasis on our live training room. 2 hours every trading day. Now that's the place where you're trading along and asking every question that pops into your head. Your questions are not an interruption of what's happening. Your questions are the reason we even have a live training room, so that you can learn how to trade. As a Passport holder, you not only have 2 hours of group training every day, but you have access to private one-on-one mentoring at no extra charge. Strategy you learn, the indicators that you own as a Passport holder, are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over. Again and again, it's a never-ending cycle. And everything you need to know, reach your goal for the day, it's right in the chart. Just got to learn how to read the chart. You got to learn how to spot the windows of opportunity. And you've got to learn how to handle being stopped out like a professional trader. They aren't affected by it. They just look for the next opportunity. They don't go back to the drawing board. They don't go buy another indicator set. They don't hire another grumpy guru. Sound familiar? We all went through it. Don't be hard on yourself. As a passport holder, you'll get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones every Monday morning, 6:15 a.m. Eastern, and you'll be able to attend the members-only workshop on Thursday night. Everything a trader needs, all under one roof, one low price. Let's wrap things up with our good word for the day. Our topic on Friday was you're a reflector. Today we're going to talk about caring for the needy. And we'll talk about this for a couple of days. Acts 6:1. Their widows were being overlooked in the daily distribution of food. Since the government did not care for widows and orphans back in New Testament times, the church took on that responsibility. Unfortunately, bias raised its ugly head, and Jewish widows and orphans were given preferential treatment over Gentile widows and orphans. How did the church leaders respond? They could have easily dismissed it, like we so often do. They could have said, "We're called to feed souls, not stomachs. We deal in matters of sin and salvation, not sandals and soup." Instead, here is what they did. First, in Acts 6:2, they called a meeting to resolve this problem. They let every member know that their church took poverty seriously, and they were each personally responsible before God to do something about it. Scripture doesn't endorse forced communism, but it clearly teaches spirit-led volunteerism. Second, they assigned the problem to their brightest and best. They selected 7 men, well respected, full of the Holy Spirit and wisdom, and gave them this responsibility. It's Acts 6:3. Instead of grooming our children for important fields like medicine, law, politics, or government, let's teach them that caring for the needy is one of God's highest callings. Why do 10% of the world's population go to bed hungry each night? Or 17,000 plus children die every single day, 1 every 5 seconds, from malnutrition and preventable diseases, when we can do something about it? How much spoiled, uneaten food do you throw out in your household each week? Multiply that by every household in America. Oh, and don't forget to throw in all the restaurants and grocery stores. Take a drive sometime behind a grocery store or a restaurant. You'll get a real idea of what I mean, and you'll probably run into some very nice people who are foraging, looking for something to eat. The homelessness crisis has taken a drastic turn in America. It used to be a lifestyle choice, or it was just drugs or mental illness. The rate of evictions just this year in Maricopa County, where I live, has absolutely skyrocketed. Landlords raised the rent, The hardworking family can no longer afford it, and they're out on the street. So I know that some people look at homeless people with a harsh eye. Man, why don't they just go get a job? Well, I don't know. Did you read the jobs report on Friday? They probably had a job. But 70% of American families are one catastrophe away. And by catastrophe, I'm talking about the transmission falls out in the car so they can't go to work. Bus stop's too far. I mean, any number of reasons. There's more to the homeless crisis now than there used to be. It used to be lazy people, drug addicts, and the mentally unhealthy. Now you've got hardworking families out in the street who never dreamed such a thing would happen. But you can thank our current administration, Joe Biden, Kamala Harris, and Jerome Powell, for the situation that all these families are in. So remember, in James 1:27, pure and undefiled religion before God the Father is this: to look after orphans and widows in their distress, and to keep oneself unstained from the world. James 1:27. By the way, guys, one of our members who's out of the country but is in contact with us, and his sister passed somewhat unexpectedly, and her son is trying to put together the money for her cremation. Now, I rarely pass the hat or the cup or whatever, but if you look in the Breeze channel, there's a link to a GoFundMe page. And, you know, if you got any spare change in between the cushions on the couch, I want you to know it's greatly appreciated. This particular member is also a very good friend of mine. So do what you can if you can. And if you can't, then don't feel bad. Okay? Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.